Hey ladies, it's Monday, 9/25/17, and this is Lori on Move It Monday. Our wonderful tax expert, Bobbie Prees, is here to share with us today. So with no further ado, I'm going to have her take it away. Go, Bobbie.
Okay, I'm going to be reading this because I'm kind of in jet lag because I'm 7 time zones away as of a week ago. So on September 18th, last week, Jafra added videos about the do's and don'ts of running your Jafra business, and they added that to jafrabiz.com alerts. The first of the 4 videos, Be the Best You, Be Right, includes a statement that consultants are responsible for following federal and local laws. So following right along with that statement, this presentation about individual income tax is designed to help you organize your income and expense information so you can give accurate figures to your professional income tax preparer. So in the next 15 minutes, I'll define business income and describe some of the deductible expenses, and also discuss record keeping and the tax treatment of contributions of Jafra products to charitable organizations. I've been in the tax world since 1972 when I joined the Internal Revenue Service as a tax auditor. And I retired in 1994 and became an enrolled agent and opened my tax practice in 1995. Since 1991, I've been a consultant and subsequently a leader in Jafra, so have an interest in and knowledge of the tax issues affecting direct sellers. The source of the information I'll be sharing with you is Title 26 of the United States Code, commonly referred to as the Internal Revenue Code, and other sources are IRS publications, which I've listed on the handout that Lori's going to post, and you can read and or print individual pages of those publications at no cost at www.irs.gov. The code requires that all income be reported, including tips and hobby income, with just a few exceptions. So business income and expenses are reported on Schedule C of Form 1040, and the business code for our business is 454390, and we're cash basis calendar year taxpayers. So our Jafra income consists of one or more of the following: the sales income, that is payments from clients, including the shipping and sales tax that we bill them for; commissions, overrides, or bonuses on the sales of a team or branch; prizes, awards, trips, and gifts; and the fair market value of goods or services a client gives you in return for products. This is called bartering. For example, instead of paying for a haircut, I give products to the woman who cuts my hair, and the value of the haircut is income to me. So the sales and bartering income total is entered on Schedule C, line 1. It's called gross receipts or sales. If Jafra paid you $600 or more in money, prizes, or awards in a calendar year, the company reports the amount on Form 1099 MISC and mails it to you by January 31st. The explanation of the 1099 figure is at the top of reports on jafrabiz.com. It includes your profit on sales that your clients ordered through your website. The IRS computer system will be looking for the 1099 figure on Schedule C, line 6, other income. So be sure that you put it all there so you don't get a notice. If you purchase $5,000 or more in retail products, there will be a check mark in a box on the form, but the amount will not appear. Federal law requires us to have a record-keeping system that clearly shows income and expenses, but the tax code doesn't tell us what the record should look like. These records must be contemporaneously kept, that is, prepared at or near the time that they're incurred. You should record the income when you receive it and record the expenses when you pay them. Sounds pretty simple. When you do this daily or weekly or even monthly, and you make a simple profit or loss report occasionally, you'll have the opportunity to look at your cash flow and change business operations if the cash flow and profit aren't what you expected. If you wait until the year is over to record your income and expenses, you will have missed opportunities to make changes in your business operations. I can't emphasize this enough. Large businesses analyze income and expenses regularly and frequently, and we should do the same. I recommend especially to new people, recording your income and expenses in pencil and on paper and not using a computer-based program. That way you can quickly correct errors when you proofread your entries against the documentation. Of course, if you've got $1,000 worth of sales every week, you're certainly going to use a computer because it does the arithmetic for you. So here's some basic rules. Number one, you report the income when you receive it and the expenses when they're paid. If a client doesn't pay for products you delivered to them or sent to them, don't report the invoice amount as income because you didn't get it. And you cannot take a bad debt deduction for amounts you didn't receive. There is a line on Schedule C called bad debt, but you don't fill it in. If you didn't receive the money, you don't take a bad debt. Number two, an expense is deductible on your tax return only once, and I'll talk about later an instance where you might forget that. Number three, non-deductible personal expenses don't become deductible business expenses just because you're in business. In fact, there's a code section that says that. They're not deductible except for specific items. So instead, we read that a deductible expense is one that is ordinary and necessary. So what does that mean? Ordinary and necessary to the operation of the business. The largest expense you're probably going to have is cost of goods sold. It's got its own section on the Schedule C. The wholesale price you pay for products you buy from Jafra and sometimes from other consultants is a cost of goods sold, as is the amount you pay for shipping. What's happening? For shipping for the products you buy from Jafra and from other expenses, from other people. Your paid wholesale for every order is very plainly shown in a report on jafrabiz.com, and I describe how to find it in the handout. So be sure to subtract the numbers with minus signs and also add in the cost of any products you purchased from other consultants. Are you still getting this?
So, yeah.
Yes, you're good.
Okay. The tax code doesn't require you to take inventory if your sales are less than $10 million. However, I suggest that you calculate the total cost of products on your inventory shelf near the end of the year. You may be surprised at the dollar amount you have sitting there that is aging and not producing income. Okay, what about the cost of products you use personally? On the organizer your tax preparer gives you, there should be a line for wholesale products purchased and another line for wholesale personal use. If there is no such line, you add it. You just insert it. My software subtracts the personal use from the purchases, and if you don't do that, if you don't subtract your personal use from purchases, you're overstating your cost of goods sold, and that's a violation of federal law because the law says personal living expenses are not deductible. If in the course of your business you provide a gift basket of your products for a raffle, the cost of those products is already part of the purchases line in your cost of goods sold, and therefore will be automatically deducted. You don't deduct it a second time. The cost of the basket is a deductible supply. In a different scenario, if you contribute products to a qualified charitable organization, for example, a safe house for women and families, and you want to deduct the cost of those products on your tax return, you cannot deduct it on Schedule C. There's no place on Schedule C for charitable contributions. Instead, this is a personal itemized deduction on Schedule A of your tax return. So you'll include the wholesale cost of those items that you're going to take off your shelf or order specifically to give to the organization. You're going to include that cost in the personal use column that I discussed just a few minutes ago. Then you can deduct the wholesale cost as a non-cash contribution on Schedule A or on Form 8283. So, what documentation should I keep for my business and how long should I keep it? Well, your preparer doesn't have to keep any of your documentation actually, but you should keep your documentation of what's on your tax return for at least 3 years after you file the return because it's an open return for that long. The regulations say you need to keep permanent, accurate, and complete records that clearly establish your income and deductions. Your client order forms, your invoices for JAFRA orders, your receipts for supplies, all of that stuff. I do use a 3-hole punch, and I put it in all that stuff into a 3-ring binder, so it's there. My timely kept notes for mileage, postage, and other expenses for which you might not have receipts, I just put in my calendar here, my little one that goes in my purse. And in fact, here for July 15th, it says 7.3 miles. That's the round trip to the post office. $3.64, post office, JAFRA. And I have 2 businesses, of course, and other things that I go to the post office for that might be deductible, so they go in there. It's right there. Okay, you don't need receipts for individual expenses under $75. However, you must record those amounts timely. Record-keeping rules for overnight travel, entertaining, and gifts are very specific. Why am I? Oh, it says I'm still talking.
We can still hear you.
Okay, is something happening?
It's just the camera. We can't see you, but we can hear you.
Okay, let me hit that again and see what happens. Now it doesn't get my microphone or my speaker.
We can still hear you fine.
Okay, you're hearing me off the other computer, I think. Okay, where was I? Oh, yes. Meals, there's specific record-keeping rules for overnight travel, entertaining, and gifts, and they're very specific, and they're discussed in publication 463. Meals are deductible only when you are away from home overnight, or when entertaining someone from whom you derive income or have a reasonable expectation of deriving income, like you're recruiting somebody and you buy them coffee or lunch or something. Having a meal with colleagues prior to or after a business meeting is a personal non-deductible expense when you're not away from home overnight. And you also cannot deduct a meal if you're recruiting the waitress. And I've heard a lot, oh, you talk to the waitress, you can deduct your lunch. No, you can't, unless you're away from home overnight. On the handout, I've included a list of expense categories that I use. Right now, I'm doing my expenses just on a piece of paper. Can't even see it anywhere, can you? I used to use a 13-columnar pad that's got 13 columns on it. I've filled years and years of that, and I decided it's simpler just to use a piece of paper that I put lines on. So the categories that I use for expenses are the cost of products, the personal use products, supplies both from JAFRA and other sources, shipping in from JAFRA, sales tax, and other taxes. Some municipalities charge a business tax, for example, on your gross receipts. Postage and shipping out to clients, travel, that includes the transportation, the meals, the hotels, that's all in one column with notes. Training, sometimes you buy a book, you hire a coach maybe, or you go to a seminar that you have to pay for. Then car expenses. And then I have a column called other, and that's where I put phone expenses and depreciation. I'm going to talk about that further in a little while. There's 2 ways to calculate your business automobile expenses on your tax return. One is the actual expenses, and the other one is the mileage rate. Both methods require that you keep track of the business miles. You have to put the commute miles in there. They're not deductible, but they're supposed to be in there. And then the total annual mileage, and the best way to do that is on the first of the year, you write down your odometer reading on all the cars that you use for business, if you use more than one. Using the actual expense method means you need to keep track of the total expenses for your car for the year. The fuel, the servicing, the repairs, the insurance, the auto club, the car wash, the registration. What? Who's talking? Sounds like Donald Duck. The business percentages of the interest on your car loan, and your business, your vehicle personal property tax, if your state has this, are deductible with either method, as are parking fees and tolls. From my experience as a tax preparer, the actual expense method is better only if you have high repair or lease expenses. You must also depreciate the cost of the vehicle if you're using the actual expense method. the mileage rate is almost always a better deduction. Your tax preparer software calculates either the business percentage of actual expenses that are deductible or the dollar amount of the mileage rate. The cost of the first telephone line into your residence isn't deductible, but the identifiable expense of the business use of the landline and any other telephones you have are deductible. The business portion of a cost of a computer or the cost of a phone should be depreciated over the useful life of the asset, and you should discuss this calculation with your professional tax preparer because it's too complicated to talk about here. To claim the home office deduction, the space must be used exclusively and regularly for business. Most of us don't have a space like that in our homes because we use our office for other things that are not business related. Any personal use disqualifies the deduction. The area of the footprint of your inventory and supply storage space does qualify. And there are two methods to calculate home office on your tax return. So if your space qualifies, you're going to discuss that issue with your preparer. Your medical insurance premiums may be deductible on page 1 of the 1040. Discuss this with your preparer. Essentially, you have to buy your medical insurance not through your regular employer, but kind of through your business. Also, Medicare insurance premiums for Part B, D, and E are also deductible on page 1 of the 1040. If your business profit is more than $400, it's subject to the 15% self-employment tax. When you're self-employed, you're considered to be both the employer and the employee, and the self-employment tax is equivalent to both the employer and the employee portions of FICA, that's Social Security, and the Medicare tax that you would have if you were an employee. And it's calculated on Form SE, and your preparer software will do it automatically. The employer portion of the tax is also deductible as an adjustment to income on the front of 1040, like the medical insurance premiums. Our income tax system here in the United States is a pay-as-you-go system. That is, you pay tax on net income in the period in which you receive it. Self-employed people and those who have income that isn't covered by wage withholding, for example, investment income or alimony, make quarterly estimated tax payments, or they may choose to increase their tax withholding on any salary, wages, or pension income they have. Failure to have enough tax withheld or paid in during the year may result in federal and state underpayment penalties, and your tax preparer should help you determine the estimated tax you need to pay during the year. Now that's all that I have. So you might have some questions if you can still hear me, or I can still hear you.
Yes, we can hear you.
Okay.
I had, let's see, Linda typed question. Oh, do we record personal use as wholesale or retail?
Wholesale.
Because it's our cost, is what we're
On cost, because the cost of goods sold is wholesale, and so you take your wholesale out of there.
Okay. Anybody else have any questions for Bobbie? Just unmute yourself if you do.
I have a question about mileage. How do you calculate your mileage?
Well, what you're really supposed to do is when you start off on a business trip, you punch in your trip odometer so it's at 0, and then when you get back home, you write that down in your little book, how many miles it's been. Now, okay. I don't do that subtraction. I just write in the amount of miles.
Yeah, you can also, I've done it a couple different ways. You can have like a little notepad in your car, right, and just write down the starting mileage, ending mileage, and where you were. Yes. And the date. I mean, that's like the easiest. And then you can take it in the house once a week or once a month and enter everything. There's also apps. There's an app called Mile IQ that has been suggested. I haven't used it. I downloaded it and never started using it, which is surprising.
I have downloaded, but not used it.
Right. But there's apps like that will track it for you as well. But it depends on what works best for you. The idea is just to do it. And some people have suggested that it's easier just to every single time you get in the car, record your mileage, because that way if you won't ever forget because you do it every time you get in the car.
Right.
even if you're going, you know, to your kid's school or something, if you, as long as you just kind of always record what you're doing, it just takes a few seconds and then you've got that figured out.
Mhm.
I have a question. I thought that when we leave our home, from our home to the first place is not deductible, but from the second place to the third place, whatever, is deductible, because otherwise the first part is commute. Because if we worked at an office, you can't deduct that. Is this true, or it's not?
You have a home office, even if you can't deduct it, all those trips are business trips.
Okay, all right. Okay. And then I have another question. So when we go to a Jaffa meeting and we buy a meal, and we really have to buy the meal in order to pay for the room, more or less, that's not deductible, huh?
No, well, it is deductible because you're paying for the room. You know, here we used to have quarterly meetings years ago. It was a breakfast meeting. It was whatever it was, $20. That would be deductible because it is the cost of having the meeting. That's what you paid the hotel for.
Okay.
It's just if you've got a meeting someplace and afterwards a bunch of you get together and you have dinner, or beforehand, you have dinner, you get there early and eat, that's not deductible.
Okay. All right.
Unless you're out of town.
Unless you're out of town overnight.
Okay.
You gotta be overnight.
All right. Thank you.
You're welcome.
Nicole pointed out that Everlance is another good mileage tracker and it's free.
Okay. And I realize that a lot of the people that are on with us tonight have been in business a long time and they probably know just about everything I told you, but there's new people coming into this company all the time who have not the faintest idea of how to do any of this. And I would love to be able to do it in Spanish as well, but I need somebody who is bilingual, who could translate it all, talk, and we have to, translate it 2 ways to be sure all the words are correct. Half of my branch are Spanish speakers, and I don't speak Spanish.
I think even though some of us have been in a long time, there's after a long time you forget things, and you also, or you get something in your head because somebody told you something and it's actually not the law, it's just something they heard that they thought was right. So I think it's really good, no matter how long you've been in business, to get a refresher of what is legal, what you should be tracking, and what's available to us to track. Because
also there's tax court cases all the time, and that interprets the law, and the IRS may or may not follow what the tax court says, but it's some new way of looking at things, because tax law is kind of gray in a lot of places.
Right. Anybody else have any questions? This is
I
a
do.
time to ask. Go.
Okay, so all right. But all the things that I use for myself, gosh, I've never deducted that because I just figured that actually, how am I going to say this? I don't claim a profit on it, and it just is kind of a wash because you have what all your invoices you've claimed a profit on, and then you have your wholesale. And the difference in there, your personal use is in the middle. Does that make sense? But we're supposed to deduct that?
You cannot deduct the cost of your personal use of your products. You have to subtract it from the cost of the products that you purchased.
Okay.
So you buy, in the year, let's say you buy $10,000 wholesale products, and maybe 1,000 of it is for you. You've got to remove that from the cost of goods sold.
So it's not a write-off, is what you're saying.
You cannot deduct what you put on your face.
Okay.
Did you see Gail? She's like,
No, I didn't see that.
Because we use a lot.
Yeah, and if you've got a family, you've got a whole family that's using it too. But if you put the product in your bathroom, it's not deductible. So you've got to take it out of the cost of goods sold, because cost of goods sold is a big deduction on your tax return. But the personal products cannot be deducted on your tax return. So you've got to remove them from that column.
It's kind of like saying you went to Walgreens and bought stuff and that's a write-off. So that's the same. It's not a write-off. So you want it, that's the same idea as you're buying it from yourself, but it's not a write-off when it's just for yourself.
Yes, that's correct.
I have a question.
Okay.
In terms of our paying for Social Security, whatever that percentage is. So if you are deducting the cost of gifts, personal use, that comes off, and you are not charged you're not charged Social Security percentage on those. It's the bottom line, correct?
It's the bottom line that you're paying the self-employment tax on.
Okay, good. All right.
If your bottom line is less than $400, you're not doing that. And one thing that's nice, even when you're later getting Social Security, like I'm getting a small amount of Social Security. I was a federal employee, so I don't get Social Security for all those years. So even if you're getting a small amount of Social Security and you're older than 66 or 67, every year that you're paying self-employment tax, you're going to increase your Social Security benefit by a small amount.
Oh. Mm-hmm.
Even when Social Security doesn't increase, because some years the benefit doesn't increase for the rest of the world, mine increased a few dollars because I was in my Jaffa business, and I'm 75, so I'm getting some Social Security. Yeah.
Oh, that's pretty cool.
That's good. I didn't know that.
Goes up a little bit.
Mm-hmm.
Anybody else have questions?
We'll take about 5 more minutes for questions if you guys have any, because that's a really important subject. Debbie, did you have a question?
No, I just said unless you're a school teacher, the windfall provision forbids us to take advantage of the Social Security system pretty much because of that.
It does for federal employees too. My Social Security is $292 a month after paying for Medicare Part B. Because I was a federal employee, my Social Security is cut by 40% or 50%. And there are other public employees, like you just said, that happens to as well.
Yeah, but not to most people. Okay,
Yeah.
so just to be clear on the cost of goods sold, right off the bat, say if you sold, is that factored in wholesale? Okay, yeah, it is, because the cost of your goods sold will be the wholesale.
From Jaffa.
Right, okay. So say if you sold, let's just say even out, $10,000, and then $1,000 of wholesale were products that you and your family consumed.
Yeah.
So your cost of goods sold would be $9,000 because $1,000 of it you did not sell.
That's correct.
Right? Okay. I just want to make sure I was doing it right.
Yeah,
okay.
You don't even, really you don't think of it in terms of what you really sold. It's what you bought from your supplier. Our supplier is Jafra, and we bought so much.
You're getting something.
Yeah.
Yes. Well, right now we get something from Jafra in print that says this is what your income is, this is what your profit is. That's like, holy smokes! But that's not. That's without any deductions. That's not a real picture.
So
that's what you're saying.
What you're talking about is your 1099, and that is basically, so for instance, if you earned a trip to Hawaii, that was a $6,000 hit for me when I earned that trip because of the value of the gift, right? Yeah. So that's gifts and supplies. So you're taxed well. You also got to go for free, but it was a gift that was of the value. You're still taxed on the value, just like if you win the lottery and you're taxed on the lottery value. It's the same thing. You were given that, you won that, basically. You earned it / won it, and so you're taxed on the value of it, and that's what that 1099 is. So anything in the gifts and supplies, like if you earn the loyalty club or anything like that, that's listed in gifts and supplies at the bottom of your invoice, that's not going to be cost of goods. That's going to be your gifts and supplies / 1099. And then your retail is half of that is your cost of goods. So when you said you sold 10,000, your cost of goods is 5,000 on that. If your at 50%. Obviously, if you're at a lower income or a lower percentage,
Yeah.
it's going to be different. But if you're going with a 50%, you know, sales all the time. Yeah. Does that make sense?
Yes, that helps.
Yeah.
I was just concerned that if I have a 1099 that says one thing and I'm submitting to the IRS something totally different, because a lot of those items I gave away as gifts, donated, teen challenge or family.
Okay, the dollar amount that's on the 1099 MISC you must report that dollar amount on your tax return. If you don't, the IRS is going to send you a notice and say you forgot to report some income.
But it's separate from your other cost of goods and all that. It has its own line.
Right.
Yeah.
Yeah.
And I will tell you, I know that, a few years ago when people were earning a $50,000 Mercedes and they got a 1099 and had a $50,000 Mercedes, some of them didn't realize that was going to be a taxable event.
Right.
That's a lot of tax to pay.
Which it may be why they went to the lease option. I don't know.
Yeah, I don't know even if there was one, but they went somewhere. And I did have a tax client that a couple of years ago, a year ago, came up to me in the supermarket and said, Bobbie, I just won the scratch off for Virginia. And I said, so how much? $200,000. Now there was withholding on it, but the next day she called me and told me the dollar amount of the withholding for federal and state, and it was not enough. And I was able to calculate what it should be so that she could make the state payment right in that year and have the deduction for the state. So people do win.
Yeah.
Sometimes. I keep trying.
You do have to play to win.
Right.
Okay, we've got about 1 minute left. Anybody have anything else they want to ask?
Well, I want to say something. I know that is a tough presentation to give. Bobbie, congratulations.
Oh, thank you.
Thank you.
And you just need everybody who's listening, if this is the first time you're hearing all of it and your brain is going crazy, just know that if you have any questions, Bobbie Prees is the most patient person. She's been my tax preparer for years, but she'll answer your questions. So just wanted you to know that.
And my contact information is on the handout. If anybody needs a tax preparer, I'm available. I do all states. I have clients in Africa and Europe as well. And a way for you to send things to me. There's so much fraud going on out there. I wanted to tell you stories, but I won't. But I will tell you, back in the 80s when I was a tax auditor in Oregon, in Bend, Oregon, there were two of us there. The IRS actually did a project on a direct selling company. It was very well known in those days. It's still in operation. And if I told you the name, you'd say, oh yeah, my parents were in there. A person got up at one of their conferences and gave a talk on what he thought was deductible. And it wasn't. And the IRS found out about that, and they audited all the returns of all those people.
Oh, wow.
And I met a lot of them. There were couples in this particular business. It was mainly husband and wife. Husband's working. I'm seeing the wife. They had stacks of boxes of stuff in their garages, inventory that, they might sell sometime. And also that person told him, well, if you and your husband go out for dinner and you talk about your business, you can deduct your dinner. Somebody gave us the tape so we could listen to all these fake things that were being told to people in that particular business. So I tried to keep this really legal.
Now, this is a lot of really good information, and I'm really glad we recorded it, and so you don't have to do it again. But I know Bobbie's on the group with us too, on the Amber Region group, and you guys can ask questions. I'm going to post the form with her information as well, so you guys can contact her directly if you need help with taxes. And if you've done nothing to this point, start today. That's all I will say. If you don't get frustrated, don't get upset, don't freak out, but start today. Start doing something different. I don't keep as good records as I know I should. So, you know, I need to get more detailed. And listening to this was a really good refresher for me. It's like, yeah, I know. I
Me
need to
too.
do that too. I need to do it every week or every month. Because I know me, life flies by. And
Yep.
I mean, you guys know it happens to all of us. Life flies by. So set up a system that works for you, whether it's once a month, once a week, every day, whatever it is, and take control of your because you're going to make more money by having all your receipts and knowing you're going to throw away so much money by not keeping track of your expenses. You've got to do it. Even if you stick everything in a folder and just shove it in the folder all month, at the end of the month, you go through it all and track it. You know, if that's what it takes, have 12 folders, one for each month, and stuff all your receipts in them every month. Whatever it is that's going to work for you, for your system, do that. And, you know, there's a ton of apps out there. You can use those if that works for you. But if pencil and paper is what works for you, do that. But the point is, start today if you haven't been doing it. And, you know, Jafra has all our invoices are online. All of that is there for our orders. So, you know, do what you can to get caught up. And then from this day forward, we promise to be better at keeping tax records. All right. Thank you, Bobbie, so much. It was really, really good. A ton of great information we can start using right away. So I really appreciate you being here and taking the time to share with us. So yay, Bobbie. All right, ladies, we will see you next week. If you're on Freedom Makers, we will stay on. Bye.